Oh man, we are days away from the FOMC making a huge critical decision. Possibly the biggest interest rate hike we've seen in a very, very long time. And they have the power in their hands to throw the crypto markets to some horrific lows. And all of that could be happening this week. We need to break down the scenarios. We need to look at the charts. We need to look at the options that Jerome Powell and the FOMC have on Wednesday, the 21st of September, a date we've marked in our calendar for a very long time, but we didn't think it was going to have this type of significance until just days previously when we found out that the CPI reading came in worse than expected, right? Lower than higher inflation than expectations, right? Expectations were 8%. Inflation came in at 8.3%. But yes, inflation was coming down, but it's not coming down enough. Then does that now mean that Jerome Powell is going to have to go ahead, do 100 basis points, pull off that band-aid, get on with it, punish the market, cause a horrible crash, potential global recession, to bring that inflation down? Remember, this is the same guy that's told us he would do whatever it takes. It's also the same guy that thought inflation was transitory, which it turned out not to be. He had to issue an apology. He also the same person that said, we're going to bring this plane down softly. We can do it. But whatever he's tried so far has not worked. It's not coming down fast enough. We're still at 8.3% year on year. That's a crazy inflation rate for United States, and he's got to do something about it. We're going to take a look at the key levels and charts, guys. Don't forget to smash the like button. Don't forget to subscribe. As always, check out the links in the description to BYBIT or BitGet if you want to buy any crypto. Now, as you can see, yesterday we actually had a decent day on Bitcoin, obviously bouncing from key levels of support. You're not going to continuously be thrown to the downside, right? Now, as you can see, we're opening up Sunday here in the red. You've got Bitcoin down 0.6. You've got Ethereum down 2.3%. We're going to come onto the Ethereum charts as well, so do not worry about that at all. We'll also take a look at the dollar index, because the dollar index is making some interesting progress, as well as Bitcoin dominance. But first, as you can see on Bitcoin, you can see we're still well within our channel, and we now need to decide on a direction. Do we want to start heading our way back up to the top of the channel? That's at 22,000. We did before CPI and got thrown back down. Or are we just consolidating here at that 20,000 level before being thrown back down harshly to 18,700 range at the bottom of this channel? As you can see, some really interesting build up. And why is this not surprising, guys? We've seen this before. Where have we seen this before? Literally just a few weeks beforehand here. You can see here, and when we first fell from this channel, we fell sharply, right? Just like this, we fell sharply. And then what happens? You get a bunch of consolidation around the 20,000 level. Why is that? Because the 20,000 level is a very important psychological level. You've got a lot of volume coming into this level. So it's unrealistic in this area here where you've got the point of control as well, for you just to push the price up and down through this level willy-nilly. It's not going to happen, right? You're going to need to take your time to chisel away at this level, whichever way you're thinking about it. If you want to build your way back up, similarly, and to the downside. At the moment, the bears control this because you enter downwardly, right? Just like we did here, we entered this symmetrical triangle, we met our price target to the downside and got our nibble buy here. I will be looking for the same thing, okay? So you're looking for this consolidation, and we want to see, do we get thrown back in to get this opportunity to buy? Now, what is that catalyst going to be? The catalyst which could give us this week another buying opportunity at 18,700, an opportunity for us guys to sniper these little purchases at these beautiful prices like we managed to do plenty of times in this channel. And that's what we need to do in this bear market, by the way. We need to wait for these opportunities, be very, very patient, detach your emotions, and look to pull the trigger at these crazy price points. So when we look back, we're like, yeah, I did a decent bit of buying at those 18,700 levels, as opposed to being the one that FOMOs in up here. This makes a huge difference. If you're the person that buying up here in the 25s when things were looking exciting and you're not doing anything here, this alpha, this difference here is huge for your portfolio, and that's really going to make a difference between a great and an okay / poor investor. Okay, so it's really important that we focus on that. So this is our catalyst. We've got the FOMC meeting on Wednesday, and that's what's going to decide which direction we're going to here. Now, previously, we thought the FOMC meeting wouldn't be too bad, right? We thought we're going to get 75 basis points. We thought that the CPI reading would have shown that inflation's come down hugely, right? Maybe down to 8 here, we were expecting, at least to this level. But we've not seen that, right? So the previous month, we had 9.1 coming down to 8.5, which is a 0.6 drop in inflation. Good from the peak. It's good that it came down again, but it only came down by 0.2, right? You wanted this much more. You wanted this down to 8, 7.9, 7.8, even the market was expecting. And even despite that, the market went ahead and said, okay, it's fine. Even if that happens, Jerome Powell, go and do your 75 basis points. Finish it off. The final nail in the coffin. You're well on top of this, and things should keep coming down. And maybe we could have a pause where you just do 50 basis points, let's say, in the next meeting. But no, this reading has changed everything. And what I mean by that is now the markets have gone ahead and 15% of the market has priced in 100 basis points. So that is not immaterial. And this has been as high as 20% towards the end of last week. And don't be surprised to see this fluctuate on Monday and Tuesday. Remember, Monday's a bank holiday where we are here in the UK to commemorate the Queen's funeral. But across the world, and obviously crypto is going to continue to move on, and you're going to see here, this will fluctuate on Monday and Tuesday. The meeting's on the 21st, which is a Wednesday, and this will fluctuate. So we want to see how much does the market price in 100 basis points. Now, whilst this is immaterial, it's not huge. 85% of the market has priced in 75 basis points. And this is where the opportunity can come. If we're looking for a dip on Bitcoin, if we're looking for this to significantly come down to those 18,700 levels and potentially even test the strength of that level, we're going to need to see 100 basis points from Jerome Powell. Okay, because the market would get shook by that. If you see 75 basis points, I can see the market doing okay to slightly rallying, but I think in the back of the market's mind is going to be, why is Jerome Powell being such a weakling? Right? Why is he not getting on with it? So I think it can backfire. A lot of people are like, oh, if they only do 75 basis points, the markets will rally. I'm not too sure about it. I think if the 100 basis points come through, yes, the market will crash somewhat, but longer term, the market will be more excited that Jerome Powell is doing what he needs to do. They don't want him to just jawbone. Jawboning is when they talk tough, right? The FOMC come out and they talk tough, like we're going to do whatever it takes, we're going to bring it down. But they're doing that because they want the markets to do their dirty work for them. They want the markets to price this in for them and make the market red and soften and reduce inflation so that CPI comes down without them having to increase interest rates and damage the economy, right? Cause unemployment and damage the economy. But now the markets are saying, no, you're not going to jawbone us. You need to actually do this. You need to grow a pair. You need to increase rates by 100 basis points. And you need to prove to us why we should respect you. Because at the moment, we're not respecting you. And that's been the trend of what we've been seeing. When we come back to Bitcoin here and broader markets, you can use this as a proxy for broader markets. We saw this rally here in the July-August period where we ran up to 25,000. That was because Jerome Powell came out too weak. And that's why we had to get this crash here where we fell, where Jerome Powell had to reaffirm his message that he's strong. He's going to do whatever it takes. So the markets innately feel like Jerome Powell doesn't have substance behind him. And that's why I think he needs to come out with that 100 basis points. And in the long run, it'll be better for us. It'll just avoid us having a longer term horrible, deep recession. So he almost needs to pull that band-aid off, bring inflation down, and prevent this fear. Because last week we had a lot of this fear as well, with FedEx reducing their forecast for 2023 as well, saying we're in a global slowdown. This is going to fear markets. And the last thing we want to do is be here for multi years, right? We want to be out of this soon, and we want the economy to start recovering once inflation comes down. In order to do that, he needs to plow on and bring that interest rate to the downside. Fear and greed index is sitting at 27. So you can see this was because of yesterday, the market was a little bit better. You did have Bitcoin recovering back towards that 20,000 level yesterday, allowing people to FOMO in, but you're getting a red day today, throwing you back below 20. We're just slightly below 20,000 right now. Now, what I do want to point to is this chart pattern, right? So we shared this chart pattern with you guys the other day. This is your broadening channel here, which we want to keep an eye on. And what we want to look at is, are we going to start coming back down to test? And that's the same thing as I just showed you. Are we going to come back to this bottom level, 18,700 range, and retest this level? Because majority of times, these patterns break to the downside. And that's what's scary here, right? If we come to these levels, just like I showed you in this chart, if you prefer this visual here, we just get zoomed in, because we've been monitoring this channel for a very long time. What we don't want to do is come to the bottom of this channel again, having once, twice, thrice, four times, almost pretty much bounced off of it. Are we going to lose it and go down to 17,600? That's what we want to keep an eye on. And we don't really want to be testing this. We want to work our way back to the top of the channel. And I'm going to show you what our recovery plan can potentially be. And this is our recovery plan. If you remember here on the weekly chart, I was sharing with you this potential W pattern. This W pattern is the only way that we're going to get a quick recovery on Bitcoin. So if you're looking at it from a technical perspective, how can Bitcoin recover? What's our bull case right now? The only bull case we have right now is that we fulfill this W pattern. Now, if I put this on the daily chart, just so you can see how we're progressing along this W, the CPI reading threw us off course, right? We were well ahead of the W curve. We were above it. We're making good progress, and the CPI threw us back down. But as you can see, there's still a chance for us if we keep higher highs and higher lows, right? If we trend out of this, we can continue to slowly work our way out there. Maybe we won't go as steeply as this W. Maybe we won't stick to this line here. But as long as you can keep your upward trend and you can keep some momentum going, at least you can then form your W. But one thing we will need is we'll need those higher highs and higher lows. And I want to show you what that looks like. So if I come onto this chart, so here you can see it, right? So this is your low. Then you've got your high. You've got a higher low now. So as long as we don't get thrown back to this bottom, this level at 18,500, right at the bottom here, as long as we rotate anywhere before there, like we're doing now, and then if we can go post a higher high, which remember this high is at 22,700, okay, just above the top of the channel, then we can get an uptrend. So that's what we need. But in order for that to happen, we need a positive week this week. And the only way I can see a positive week is if markets somehow accept a 75 basis point rate hike. But I can't think of how are they going to accept that? How will markets accept a 75 basis point rate hike given what's happened with CPI? Even if they do accept it and rally in the short term when he announces 75 basis points instead of 100, then surely longer term they're going to be upset that Jerome Powell's still being soft and it's not the right thing to be doing. So I can't see how that's going to be a positive this week. I can only see a little more red this week, to be completely honest. That's my viewpoint. And bar a shock, like 50 basis point rate hike, which would be impossible for him to do, I can't see the market having a substantial rally. So again, I've got my DCA hat on. I'm getting myself prepared for price targets to the downside. I can see VPVR here on the 4-hourly. A lot of volume at this level, but once we clear below this 19,500 level, which we just wicked below here on this 4-hourly candle, then things get easier, right? And I think that's going to make our journey down to 18,700 quite quick once we get a little bit of bad news from the Fed. So that's what I'm watching out for here on the 4-hourly chart. If I also bring out the the Bollinger Bands, you can see the same thing here. We're in our Bollinger Bands. It's constricting now, which normally means you're getting yourself set for a more volatile move. If I switch that up to the daily chart as well, you can see we're in the middle of our Bollinger Band here because right now the market's stuck between the bottom of the channel and the top of the channel. So look at that, how beautifully the Bollinger Band is now confluencing with the top of our channel, similarly with the bottom of the channel here. And this is what we're playing with. We're in the middle of our Bollinger Band right now. And the question is our Bollinger Band going to send us down to the downside? That's what I'm looking out for this week. That's what I'm trying to prepare myself. If we do get a rally to the top of the channel at 22,000, great. Not going to FOMO in, not going to do any buying there. I'm going to sit tight and wait to see if we do get movements to the downside. Let's take a quick look at Ethereum. Ethereum at the bottom of its Bollinger Band. It needs to bounce from here on the daily, guys. The reason it needs to bounce is the pattern I shared with you guys the other day is look at that support line here. Look at this support line, which has bounced once, twice, thrice at 14.15. Okay, 14.15 on Ethereum. We're just $15 away from that now. We're at 14.33 at the time recording this video. So you can see we're bouncing off this green line. If we lose this green line, I'm worried that we will have nastiness because as you can see, you've got this almost head and shoulders type pattern. It's a bit different here, but can see this head and shoulders type pattern, which could be throwing you to the downside, which will bring you to nasty price targets of 835 on a head and shoulders price target pattern. But more importantly, I think the next level of support is going to be at the top of the channel, 1272, and then at the bottom of its channel, $1,012. So that's what I'm looking out for on Ethereum. Remember, if Bitcoin wants to go test the bottom of its channel at 18,700, the equivalent level for Ethereum, now that the merge is out the way and all that hype is gone, is 1,012. So I'll be looking at these kind of regions to see, can we get a cheap bargain buy on Ethereum this week as well? For the time being, I'm stepping away from altcoins, not looking to add altcoins in this kind of turbulent environment. I want to see, can I top up some more Bitcoin and Ethereum at these cheap levels? Remember, when you do get these flush outs, do get these visits to 18,700, maybe even 17,000. I just want to stay very focused. I don't want to miss the opportunity on Bitcoin and Ethereum right now. So that's what I'm doing again. I was starting to load up some altcoins again before the CPI, as in a little bit before then. But I'm going to be pausing on that and focusing on Bitcoin and Ethereum just to make sure I've got bags topped up. Let me know what your game plan is in the comments. If you appreciate this type of content on a Sunday, let me know so I can keep providing you these timely updates. Go watch this phantom video here, and I'll see you in the next one.